So if you are talking about financial freedom, then ultimately you are actually talking to people who are looking for financial freedom. Go for organic growth. It is slow, but you have to do it consistently.
How can LinkedIn fit into this outreach approach?
LinkedIn is one of the best platforms for you because people have that kind of mindset when they consume content on LinkedIn. Usually you have seen that there is not much of a clutter out there. YouTube has a very long life cycle and your content is going to be there for years. And it's a search engine. People search for certain content and your content pops up in their search results. Maybe the video was created 2 years ago, but you are still ranking. When you do educational content, you are not salesy because you are just giving them. You are not asking for anything. So I told you about go-giver strategy. In that case, you are not asking anything in return. You're just giving them knowledge. Have you seen any Ferrari's ad on Facebook?
No.
Lamborghini's ad on Facebook? Rolls-Royce ad on any social media channel. You have to identify the pain areas of your potential investors. So let's say if somebody is generating $200,000 of income every year, they want to save taxes. And if you tell them that this is one of the potential ways to save taxes, then why? They would like to listen from you. So that's one way of nurturing the leads in a very impactful manner. Don't just rely on online or offline. So I've seen that people just do either offline marketing, like just organize events, don't do online, or just do online, just purely rely on online and don't do any offline. But when you do both, then the magic happens.
Welcome everyone. If you are a multifamily real estate syndicator, this episode is for you. Today we are going to walk you through the tried and tested framework for generating and nurturing leads. Let's get started. Vikram, you have a long experience of working with multifamily real estate syndicators. According to you, what are the strategies that are working when it comes to generating leads?
Perfect. So before we take a deeper dive, I would ask you a question. If you want to invest, let's say $50,000 in a real estate project, uh, how would you uh, how would you invest? Like, would you be going through a online channel, or would you check out the property, or would you speak to the person who is facilitating the transaction, like the syndicator? How would you go about it if you want to invest $50,000 in a property?
It's not just one thing. I would go for all the routes because it's the giant risk for me and I would like to go through all the channels to understand it's lucrative for me or not.
Yes. So now the point I'm making here is that online media is good for lead generation. But when it comes to actual investing, or in marketing language, conversion, you have to create that kind of rapport and relationship with your potential investors. So online channels, for example, social media or email marketing or Facebook ads or whatever we do, will help you generate the leads. But people are not going to invest $50,000, $100,000, $200,000 just by watching your YouTube video. You know, they will speak with you and they have to first trust you, because they are investing with you. And these are private placements. And before investing that kind of money, anyone would like to know that person very well, right? And for that matter, social media helps because that way they can see that yes, you have that kind of expertise and experience in this domain and you have the right kind of knowledge to manage this property or transaction. But at the same time, they also want to see that are you credible enough to manage their money, right? Because the biggest challenge in multifamily properties is that there is collateral in a way, but there is no collateral. So at the same time, there is a huge opportunity because ultimately real estate properties have a very high potential to provide you that kind of growth which other channels cannot, right? And there is very less volatility. So if you work with the right syndication or the right general partner, then you have a great potential that yes, you will get 20-22% of IRR on your investment, right? But at the same time, there is certain degree of risk involved. So you have to be aware of the downside risk also. And I'm just talking from the investing perspective. We will come to the lead generation part and lead nurturing because ultimately, you have to make your investors confident about this whole transaction, that yes, this is how this deal is going to work. And you have to give them all the details about the metrics, that what kind of returns they are going to they're going to have, for example IRR or cash flow or equity multiple. But at the same time you also need to tell them that yes, these are the downside, so they have to be comfortable with both. So when we invest in mutual funds or other channels, so we are aware of the risk involved. When we invest in equity market, we know that yes, equity market is very volatile. It can go down by 10, 20, 30, 40% anytime, you know, and there are factors which are not in your control. You know, in equity market, there are a lot of factors which are not in your control. But in real estate, you have many factors which are in your control. Like you have the tangible asset, you can force appreciation. If the syndication is good, then you can experience amazing growth. So you have to make sure that your limited partner, your potential investors know about this. Yeah. And that's how you can generate a lot of leads talking about these points in your social media, in your online content. But at the same time, when I say that you are generating leads through social media, it is not going to be that they are going to invest with you, that they just go to your website and transfer you 50K. I have never seen that happening. So you have to have some one-on-one calls. You have to give them opportunities and platforms to interact with you one-on-one, right? So that is the best strategy, that you generate the leads through social media, but you get them on a call with you, tell them about a lot of things, the nitty gritty involved, like what we discussed just now, and then uh, take some commitment from them that whenever there is some deal available with you, they are going to be ready for that kind of investment.
What is the biggest mistake you see when syndicators are generating leads?
The biggest mistake is that always relying on online channels and not doing the other part, which is about relationship building, which is about going out in the market. So I would say that if you want to generate leads effectively, first of all, go to your local market, join the golf club, join the shooting range, join the country club, whatever, uh, so just hang out where your potential investors hang out. Okay, so you should be attending the conferences, you should be attending the events, right? And take the leads from, like, take the details, take the contact details from there, and then nurture them through newsletters, send them industry reports, analyze the market, send them your analysis, your take, and make it regular. Like you can just release maybe one monthly newsletter analyzing the market, that this is how the market is moving, these are the recent economic developments, these are the recent changes in the industry, this is how it is going to impact the multifamily sector, stuff like that, so that you are educating them about the industry. And then over a period of time, you will feel that there is a difference. People are now reaching out to you, because whenever they are ready for that kind of investing, whenever they have funds, it is not necessary that everyone has funds available right now. They might invest with you 6 months, 12 months later. I've seen people investing with my clients 2 years later. So it happens. But at the same time, we were sending them a lot of educational material, and we were organizing webinars, we were organizing some master classes, some workshops. You know so first of all, you have to give. So I would say that adopt a go-giver philosophy. Whenever you want to succeed in industry, be the go-giver. Read out the book. There is a book called Go-Giver. Okay, and if you are giving, ultimately the universe is going to give it back to you, right? So provide value and whatever you know about. Okay, and ultimately you will get what you deserve.
Because ultimately the investors are going to get the knowledge, they will be feeling ready after some time. Once they get the information from you specifically, they're able to trust you and they get converted into leads automatically.
Absolutely.
So let's break down how we can generate high quality leads.
So first of all, you have to know that what kind of investors you want. If you want to work with very high net worth individuals, then your strategy is going to be different. if you want to work with people in a certain industry, for example technology or healthcare, and you want to your messaging is that, let's say, achieve financial freedom through passive income by investing in multifamily. So if you are talking about financial freedom, then ultimately you are actually talking to people who are looking for financial freedom. But for a high net worth individuals who is already worth maybe $10 million plus, he has already achieved financial freedom. So that messaging is not going to resonate with that. So first of all, just decide that what market you are going to target. And likewise, you have to create your brand like that, because ultimately, if you want to work with high net worth individuals, your branding and your core messaging is going to be very, very different than other segments. So this is the first step. And this is where people falter, because their messaging is so mixed that it's neither caters to the person who wants to achieve financial freedom and not to the high net worth individuals. So that is where their marketing doesn't work.
Can you walk us through the warm network strategy? How does this work? And many people think that people in their network do not have enough money to spend or have enough capital to invest in their properties.
So the warm network strategy is that there are always people around you who might you already know. So let's say if you have been in the industry for 20, 30 years, you might already be knowing certain people, your bosses, your colleagues, your peers, your other people who you already know. So if you tell them that you are into this industry, you are working on this deal and this is the opportunity and these are the details, then chances are that they are going to listen to you. Okay. And sometimes people just allocate and invest in multifamily for diversification purpose. I've seen that people in, let's say if you have $1 million, and you want to invest, how will you invest? you know you will just spread it into different kind of assets, right? So I would invest, let's say, 10% in equity market, 10% in maybe crypto. I'm just giving you example. 10% in some other domain, mutual funds, 10% in bonds, 10% in something else, 20% in real estate. That's how the allocation works. So that's how people invest in different channels. And multifamily can be a very high potential channel of diversification. So that way, warm network strategy can work. If you make this a point, tell them that, hey, this is a good diversification because it is real estate. So it may happen that you may not get very high returns every month. So let's say the returns are like 6-7% cash flow, cash on cash. So that is not very high. And sometimes even that is not done because there are some capex involved, there is opex involved. So sometimes even those kind of distributions are not done. But in the long run, when you exit the property, like in 5 to 7 years, when you sell the property and the valuation is like you have like 2x of your investment, then you have made like 20-22% on an average every year, CAGR, IRR. So that these kind of things you have to make people understand, right? And real estate works in the same way. You cannot trade real estate like equity. You cannot buy today, sell tomorrow. It doesn't work like that. Even if you buy your house, you don't buy your house today and sell it after 2 months. You keep it for 10 years, 20 years, maybe you never sell it, you know so that is real estate. So you have to make people understand these things.
So what I get is that I, as a syndicator, need to understand the needs of my warm network. I need to understand what kind of diversification they are looking for and where they are wanting to invest, so that I can create a messaging like that and I can bring them into my projects and make them invest.
Yes. See, you can take inspiration from the mutual fund industry, for example. How they tell you that this mutual fund is right for you. So what is your approach? So they ask you certain questions. Let's say if you want to invest in certain mutual funds, and like the platforms I use, they ask certain questions that what is your expectation of returns, for how long you want to invest, all these kind of questions. And depending on that, they tell that this is the conservative approach of investing, this is the hybrid, this is the aggressive investing approach. So you have to just make sure that you also tell your investors that this is how these investing patterns, or these things work in multifamily deals. you know but ultimately you have a very high chance, because let's say if you are working on a value add deal, So value add deals work that you are going to renovate the property, you are going to improve the services over there, and that's how the rents are going to improve, and that's how the valuations are going to improve. So in that case, ultimately the value of the property is going to improve. Yeah, and you are going to get that benefit over a period of time, but it's not going to happen overnight, right? So you have to make sure that people understand that. And of course, if somebody understands real estate, then they understand multifamily syndication also. And that way, you can generate leads and nurture them, right? But when it comes to the new leads, we are talking about the warm network, which people who already know about you. But people who don't know you, they have just come across you in social media talking about these things, so they are not going to invest with you for sure. So you have to nurture these leads.
For instance, if someone has already tapped, or like they find their warm network is already being tapped, where do they go next now?
Yeah, so in that case, as I told you, that attend the conferences, join some golf club, join the shooting range, join the horse farm, whatever, like, wherever you feel that your potential investors are. And that way you can generate the leads from there. The other way, this is the offline mode. The other way is that you can organize some good webinars on certain topics. For example, how you can invest in multifamily real estate through your IRA funds. So there is a certain way you can channelize your retirement funds into real estate legally. Okay, and your accountants can tell that, your CPAs can tell that, but people don't know about that. And a lot of money is actually get locked into these IRAs for several decades until a person gets retired, and they have no control over that. It's invested in equity market, and there are chances when the person gets retired, the equity market crashes at that time, or it's not in a good state, and whatever they earn, maybe they might not get decent returns on their investment because that is not in their control. So they can actually withdraw some money from there and channelize into real estate where they have better control. So there is a way. So I'm just giving you example that if you find out these topics, different topics, and organize educational webinars and tell people that yes, this is one of the ways, then of course you are going to generate leads. Yeah, and then you can tell them that you can work with your CPAs and you have these opportunities available. If you want to work with us, if you want to invest with us, we are also happy to work with you.
This also gives me this idea that people have the amount locked in their IRAs, but they also have, like, we have amount everywhere, we have capital everywhere. It's just that people are not aware, and how to allocate it and where to allocate it is the awareness thing that syndicators need to create. So similar way, they have capital amounts invested in any other place as well, like insurance companies, and then they have other investments, and they have some passive returns coming from various sources. They can put these amount in syndication, invest these syndicate these sources we are talking about. So this also brings the avenues for syndicators to grow the leads from there.
Yeah, actually, so when you talk about diversification and you tell that you have a chance to generate 20 to 22% IRR, it's a very decent return. So you don't get 22% IRR from other channels, you cannot project that kind. So if you know that yes, you have certain money logged in, maybe uh, I've seen people withdrawing their money from the equity markets and putting it into real estate because they cannot actually, it's a roller coaster ride when you invest in equity markets. One time, you experience that, your shares are up, but when it crashes like anything, you know. So now, for example, in the US, the equity market is at the peak. Now there is no room for growth, maybe, you know. So now there are chances that it may crash. I don't know, but because the US debt crisis is going to be even more worst. So there are chances that the markets crash, and when it crashes, nobody can control that. So people do deploy these kind of strategies that whenever they generate decent returns from equity markets, they want to exit from there because they know that now it's going to crash. This can be one of the reasons. The other reason that I have no patience, or I have no, I don't want sleepless nights investing in equity markets. I just want to withdraw my money here and invest in real estate so that I can be comfortable and I can focus on my work rather than checking the stock prices all the time. You know, so this happens. So yeah, and volatility. So in multifamily, you don't have that kind of volatility. That's also the advantage.
How can LinkedIn fit into this outreach approach?
LinkedIn is one of the best platforms for you, actually, because people, have that kind of mindset when they consume content on LinkedIn. And usually you have seen that there is not much of a clutter out there, and if you produce high quality content over there, then you have very better chances to get the right kind of audiences. And now the LinkedIn algorithm has also improved a lot. So it's not just limited to your followers. If you are producing content, and LinkedIn comes to know that you are producing content on multifamily industry, for example, once they come to know about that, and for that matter, you have to spend time on LinkedIn and you have to do produce content and post it consistently. So once the algorithm understand that you want to reach out this kind of audience, then they start showing you your content to those audiences automatically, because ultimately these platforms also want you to grow, because if you will grow, they will also grow ultimately. If the user gets certain benefit from LinkedIn, of course LinkedIn is also going to get the benefit of higher engagement. Maybe you start advertising with them, so they will also help you out in a certain way, but you have to understand the algorithm and you have to be a little patient.
Right. Let's talk about digital marketing side. How can syndicators use online strategies? LinkedIn was one thing, but there are other source and there are other platforms where syndicators can use.
Yeah, so let's say you can also work on YouTube, because YouTube is the ultimate platform for educational content. And what we discussed just now, diversification, risk management, blah blah blah, high potential of returns, if you just keep generating content on these topics on YouTube, uh, YouTube has a very long life cycle, and your content is going to be there for years. So, and it's a search engine. So people search for certain content, and your content pops up in their search results. You know, maybe the video was created 2 years ago, but you are still ranking, for that. And there is very less competition when it comes to multifamily syndication. You know, there are thousands of multifamily syndication companies, but if you go to YouTube and search, you won't find, you will find just handful of companies maybe. So there is a huge potential for multifamily syndication companies on YouTube.
Great. What about paid marketing? When can syndicators use this approach?
So paid marketing has certain limitations, of course, because the US SEC has certain regulations. If you have a 506C deal, which is for accredited investors only, then you can invest, then you can advertise, these
Okay.
deals in social media, and you can do paid advertising because that is for accredited investors. But if it is a 506B deal, you cannot advertise it, right? Because as per SEC, there are a lot of regulations. You can read about that in detail, on their website, and I can put the link of those criteria also in the description. Uh, Very broadly, I would tell you that the deals which are meant for accredited investors can be advertised. Why? Because accredited investors have certain kind of net worth, and if you achieve certain kind of net worth, there are chances that you also understand the risk involved in investing. So it is not like somebody has a corpus of 50,000 bucks only, or just retirement funds or whatever, like, and they just invest in multifamily, and for some reason the deal doesn't work and they lose all of their money. So the government doesn't want that. They want that a person who has a net worth of certain, like, there is a criteria, like somebody, an accredited investor is someone who has been earning $200,000 in a year, and uh, there are higher chances of project the same kind of income in the coming times also, and also some certain net worth criteria. So those kind of things. So when it comes to paid marketing, you just have to make sure that your deal is meant for 506C deal, which of course most of the multifamily syndicators would know.
This is the reason that we do not see so many ads about the properties which are, going through the market through syndication.
Yeah, you're right. That's correct. And that is why you won't find too many ads like that. And the other thing is that, have you seen any Ferraris ad on? Facebook.
No.
Lamborghini's ad on Facebook. Rolls Royce ad on any social media channel. Have you seen that? So I would say that paid advertising hardly works, in multifamily syndication. That is why I'd say that go for organic growth. It is slow, but you have to do it consistently. But if you keep doing it, definitely you are going to be, uh, you know, having a greater chances of success.
Once you have investor leads, what's the next step for syndicators to nurture them?
Yes, so there are different ways to nurture. Newsletters, for example, is the very high potential way to nurture leads, but sometimes even people don't read newsletters. So in that case, you can invite them for certain webinars, certain workshops, or interesting subjects. You tell them that you are going to invite an expert. For example, we invite certain CPAs, cost segregation experts, attorneys on how people can optimize their taxes, on how people can utilize their IRAs, stuff like that. Which, of course, you have to identify the pain areas of your potential investors. So let's say if somebody is generating 200,000 of $200,000 of income every year, they want to save taxes. And if you tell them that this is one of the potential ways to save taxes, then why? They would like to listen from you. So that's one way of nurturing the leads in a very impactful manner. Then you keep on doing your YouTube content, because ultimately, if you even if you do like one or two or three, four videos in a month on these subjects, then definitely over a period of time you have 50, 100, 200 videos on YouTube about this. You can create a whole series of that, and these videos are going to be ranking on YouTube, on Google also, because Google also gives you results from YouTube. So that way you have multiple advantages, and people will come across your content that way. So that's how you can nurture your leads. But at the same time, don't just rely on online platforms. You know, I said that one-on-one interaction is very critical when it comes to conversion.
What are the most common objections and how to handle them?
The most common objection is what is the security? Because whenever you invest in certain thing, you want to know that what's the security, what's the level of collateral, or like, is your money secured or not? So that's the most common objection. And how you are going to handle that. So of course, as a multifamily syndicator, you know that you have a tangible asset in the back. So you can tell that yes, this is the property. Like, you are not investing in the stock market, which is just a paper asset, or you are not investing in crypto, which doesn't have any intrinsic value at all. you know so you have a tangible asset you can touch and feel, and people are living in that. So that is one thing. The other objection uh, arises that what kind of control they have on this property. So of course, when you are creating a multifamily syndication company, you have to make them understand that these are the roles and responsibilities of general partner and limited partners, and they are going to be the shareholder in that company. So there is no collateral, actually, like you don't have control on that property. So at the same time, there is asset, but it is going to appreciate in value, and definitely is going, when you exit the deal, definitely you are going to get the benefit out of that. So these are common objections. The other uh, objections I've seen, that are they going to get the cash on cash returns? What's the guarantee on that? Like, sort of, what's the nitty-gritty involved? So that those kind of questions you can address. So basically, you have to make sure that your investor understands all the opportunities and risk involved in the transaction.
How can a syndicator make out or measure if their lead generation methods are working or not?
Of course, so if you are getting qualified leads and you see that yes, these are the people who have the right kind of profile, you know and they are having certain kind of disposable income, when then of course you can measure that yes, your lead generation methods or strategies are working. That is one way. And definitely, if somebody is coming on a call with you, or somebody is attending your masterclass, workshop, webinars, then definitely, they are not coming just like that. They are not wasting their time. They have interest in that domain. They want to learn, and that is why they are spending their time with you. You know, so what kind of attendance you are getting in your sessions? You know, try to organize some offline meetups also. If you find that at a certain cluster, in a certain location, you have these many investors available, 8, 10, 12, whatever, try to organize these meetups over there, offline meetups. And that's going to actually, help you a lot, because offline meetups are the best. So it's a mix of online and offline strategy, don't just rely on online or offline. So I've seen that people just do either offline marketing, like, just organize events, don't do online, or just do online, just purely rely on online and don't do any offline. But when you do both, then the magic happens.
They need to have a hybrid approach.
Absolutely, the hybrid approach only is the way to work. Like, uh, you have to generate leads through either online and convert them offline, or generate leads offline and nurture them online. you know and I have seen that, when you combine these two, you have amazing level of success.
So, is there any system or structure one can use? And uh, when we say about nurturing the leads, is there any way they can use and they can do that without being salesy or pushy?
When you do educational content, you are not salesy, because you are just giving them, you're not asking for anything. So I told you about go giver strategy. In that case, you are not asking anything in return, you're just giving them knowledge, you're giving them resources.
Such a powerful conversation, Vikram. I'm sure anybody who is watching this is much clearer about how they can generate and nurture leads with clarity, trust, and consistency, and with confidence. Remember, relationships aren't built in a funnel, they are built through genuine connection and steady follow ups. Thank you for joining us, and we will see you in the next episode.